Hello, friends, and welcome to the Optimized Advisor Podcast, where we focus on optimizing the well-being and best practices of insurance and financial professionals today. On this show, our objective is to help you optimize your life, optimize your profession, and learn from other optimized advisors. I'm your host, Scott Heinela. We hope you enjoy the show. Robert Kirk with InterGen Data. Thank you for coming in today.
Thank you for the invitation. Absolute pleasure to be here.
The pleasure is mutual. We sincerely appreciate you taking the time. There's much for us to discuss and learn about your journey and what it is that you do and the expertise that you have to discuss with us today. But I thought maybe we start with just telling us a little bit about your background and your journey. How did you get to this point?
Well, hopefully I won't take out all the oxygen in the room, but I'll start with the basics. I have been in financial services over 30 years, let's just say 30 plus. And I started out on Wall Street. I've basically done everything. I've been the cook, the bottle washer, the chef, the maitre d', your parking lot attendant. And I've been fortunate to be able to graduate up from doing the business to running the business, and then from running the business to actually deploying technology for people who do the business. Throughout that time, I've seen my career grow from small firms to larger firms to eventually to clearing firms where we're clearing and settling trades across 4 countries in the world. And that led to a great opportunity where I could be CIO, Chief Information Officer of a top 40 independent broker-dealer. And we were teaching advisors, we were teaching CPAs and estate attorneys how to actually do the business of wealth, whether they did it themselves or whether we actually did it for them. Unfortunately, what happened during that time I was CIO is I had an event that happened in our life, my family's life. My grandfather was getting older, much like any one of your constituents here or listeners on the podcast. Mm-hmm. And as they get older, you start to realize there's certain things that deteriorate. Maybe it's their mind, maybe it's they slip and fall, maybe they get hurt. Well, we decided to move my grandfather from San Antonio, Texas, let's say, up to New York. The issue was after a few years, he ended up, getting Alzheimer's. Mm-hmm. And Alzheimer's is a devastating disease. Yeah. So if you're going through it or dementia, know that there are people that are help. There are people that want to listen and will provide you guidance or an ear. I look at what was occurring during that time, and we weren't prepared physically. We weren't prepared emotionally, of course. But what was worse is that we weren't prepared from a financial or legal aspect. So when we had to make the decision to finally move my grandfather into a long-term care facility, it was an event that floored us because we weren't prepared for the $14,400 a month that it cost. Mm-hmm. Unfortunately, he stayed in there for 4 years, which totals up to almost $700,000.
Wow.
And that's a number that should scare 99% of this country. Mm-hmm. The choices are you deal with it at home, you deal with the stress, you deal with the anxiety and the financial burden, or you don't, but you still have the stress, the anxiety, and the financial burden. And we decided to keep him there, but because we hadn't set up the trust 5 years in advance, because we hadn't allocated monies specifically for this event, we had to come up with the money ourselves. And the government took all of his money because we didn't do the trust in time. So during that time, I saw my parents making good decisions and bad decisions, but mostly they were emotional decisions. And this is a time when you really need guidance, you really need help. And as I was living in Texas and Dallas working for this broker-dealer, I realized at the time, who's worse than me? I'm deploying tech, I'm building tech, I'm trying to help people do wealth management, but I can't help my own family.
Right.
I mean, you question, what good am I? What am I here for? And I soon realized that it made me start to think, almost like Simon Sinek says, why? Why couldn't I help? So I talked to our advisors and all the brilliant people, CPAs and lawyers and even our board members, and said, why couldn't we do this? And it all boiled down to just a very few simple things. One, they didn't have the data on when things like this typically happened or why. And then secondly, they didn't want to have those conversations. Nobody wants to say, can you tell me when you're planned to have a stroke?
Mm-hmm.
Can you tell me when you're planned to get your wife get cancer? Well, even if I told you my wife had cancer, you would probably start to internally say, I don't know what to say next.
Right.
What do I do?
Right.
You
Right.
shy away from that it's not confrontation, but you shy away from that communication. You shy away from wanting to help
Mm-hmm.
because you don't know how. That's when I realized that something had to be done. And that's what started me off to build InterGen Data and what it is today.
How long did your father need care, probably in-home care, prior to him going actually into a full-time facility?
Great question. It was, from my recollection, about 2 years.
Okay.
And we tried to delay that as long as possible.
Mm-hmm.
I even think today, looking back, hindsight being 2020, my family would probably say that was probably a mistake because it led to much more emotion, much more financial burden than we probably needed to endure at that time.
Right. Who were the caretakers mostly? Your parents? Was it your mom?
Yeah, so it was actually my mom. So my grandfather, that was her dad. And my father, some people who are in my inner circle know this, and your podcaster listeners will hear this now, but my father's a quadriplegic from the Vietnam War.
Okay.
So she takes care of him
Already. She
full-time.
already had a person she was caring for.
Yep. And she was used to dealing with the government, used to dealing with everything. But then you throw on top of that her father, who she has a much different relationship with,
Mm-hmm.
who we were scared could just walk out the door, think he was in 1942 and just never come back.
Right.
He wouldn't know where he was. And the interesting part was we would have great conversations. His memory was astonishingly, wickedly accurate of what he was going through that day in 1942 or that day in 1951, but he wouldn't know who we were.
Wow.
So we were recording and listening and writing the stories down of what he was doing and where he was going through, which to us is phenomenal. But then to realize that he didn't know who we were, and
Right.
he'd get mad or he'd get angry or tell us to get out of here.
Right. Right. Interesting.
So it's
Out of fear and confusion?
both.
Yeah,
Yeah,
okay,
absolutely.
yeah. So that was your family's experience with a long-term care event, and they were certainly financially, emotionally, the consequences, just not equipped.
Not at all.
Yeah.
Not by any means. I mean, it's scary today to think about the people that are going to try to do this on their own without seeking help or advice.
You know, it's an interesting thing because, like, for us, the educational aspect of long-term care planning and the care and effort and energy that should go into that prior to, because once it's happened, it's too late. Your firsthand confirmation of that, I'm sure, and so we are regularly getting our head up against the wall or met with resistance of the things that you mentioned, where advisors just look, I'm really good at managing their investments and helping their overall rate of return and growing their wealth. And not that I turn a blind eye to it, but maybe that's one element of it. The other element of it, well, I don't want to jeopardize the job or the role that I am doing for my clients, and facing the realities of your financial future and the pitfalls that you may be faced with is where, let's be honest, the industry is falling short.
Completely.
Yeah. And I don't want to paint people all in this. I take that back a little bit in the sense that it's not fair to paint a broad brush to everybody, because there are many advisors who are more adopting this on a comprehensive and holistic level. But to your point, and this is the other part I want to unpack, is how do we continue to arm them with information, with supports, with data, with technology as a broad stroke of saying, no, these are things you really, really should look at doing, and how we can help you better face these real realities of your clients. Isn't that at the end of the day, not just to grow, but to help preserve as much of the wealth as you can for your clients from a financial aspect? And then the other part of it is, like it or not, we are absolutely involved in the emotional side and the unintended consequences of many of the circumstances that are at the forefront of these clients.
100%. Couldn't agree more. And maybe this would be a good time to go a little deeper or double click, as we say, into, our company and what we do. So InterGen Data, we are a life event prediction and analysis company. If you think about that previous story where I told you about my grandfather and all that we went through, the one thing that I realized was there was not enough data there to put into the risk systems, the planning systems, the asset allocation tools, that, hey, there's a road bump ahead, there's a hurdle, there's a stop sign, there's a giant pothole, the road's out 6 years from now. And I started on my journey to go look for data. And I found that there was enough data to then say, this is when something typically happens, to when something probably happens, probably to, can I make it statistical, and then can I predict it? So today, we predict 95 different life events. There are 14 life events that we consider wealth related. So when someone gets married, who they're likely to get married to, how many children, how many divorces, how many homes and cars and starting businesses. Those are mostly the good stuff, right? Then on the other hand, there's 81 critical illnesses. So cancer, but 27 types of cancer, heart issues, brain issues, Alzheimer's and dementia. And if you look at what we do, we're trying to provide our users with the data of what's likely to happen, the year of occurrence, and then how much of a financial impact it would make. Because everything doesn't happen always in just good ways or bad ways. Sometimes it happens together. I send my daughter off to college. Yay. Great. I'm excited. And then all of a sudden I have to deal with a mother-in-law who has medical issues. Oh, what do I do? Right? And those types of life events disrupt what we try to do. Now, the reason why I was thinking about what you said earlier, and I wanted to say this, was that because the advisors, they didn't have this data going back several years ago.
Right.
They're not nefarious. People don't wake up in the morning and say, hey, how can I create a financial plan that makes me gain all the money and does nothing for my clients? Now, is it possible there are bad eggs? Sure. In every shape, form, everywhere.
Yeah.
But for the most part, your listeners, the people practicing this, they want to help people, but they don't know how to help them in certain stages of their life. So I look at it in the sense that a navigational tool. You use Google Waze, you use Apple Maps. You're driving down the road and it's like, hey, there's an accident 3 miles ahead. You may want to alter your route. You may want to slow down. Well, we would all use that. We do that today. We do it for lunch. We just go in and see what's happening down the road.
Right.
But the question is, why wouldn't you use that in your financial plan? Because today, if you don't have something that says, hey, did you know that people like you have a tendency to get cancer? Or here's how much it costs in your area. Or you might have these other issues. Well, and if that's not incorporated in your plans, then what are you doing? Yeah. It's like saying, here's the newest navigational app, and I'm not going to tell you anything bad that's going to happen. Would you use it?
Yeah, no, that's a great example. Well, first of all, most people already have that, right? I have something that'll tell me to get from point A to point B. The step ahead, the next step of progression is exactly that, right? It's funny, I was on my way to dinner last night with friends, and we're heading to Dallas, and he was using Waze, and we started out on said course, which was the traditional course and way to get to where we were going. And all of a sudden it rerouted. And he said, this is interesting. I've not gone this way to this restaurant before, but here we go. We'll see how it goes. And that's because there was a major accident in the normal route. And then all of a sudden we're going and it pivoted again. So we had 2 pivots that we took to get to the final destination. Why shouldn't our financial planning journey be similar to that?
Exactly. And what we're trying to do is provide the data that will help advisors and empower them. Empower them to know what their clients are likely going through. Empower them to know, hey, here's the hurdles or the roadblocks or the major events, the crashes that you might want to think about. Worst case scenario, it's a great conversation starter to have with your clients. In the best case scenario, not only is it relevant, it's timely. What better way to say this advisor or this agent knows me? They just get me. Why would I want to leave?
Yeah.
That's huge.
How did you get to the point of getting to this? What was the journey to acquire all this data to get to where you are today?
So I'm laughing a little bit because it was a long journey, and half of me wants to say, how long do we have?
Right.
So when my grandfather went through that event, and as I looked at the 34 different planning tools, the 20 different risk systems, the asset allocation tools, I realized
The products that exist, the product
At the
solutions
time,
that existed on the market at the time.
Yeah.
Okay.
they didn't have the data where it was, hey, someone at that age is likely to go through empty nester. They're likely to have a critical illness, and they're likely to break a hip or something. Well, why isn't that data in there? Well, what we found out is because advisors aren't responsible for putting it in there. And the companies themselves don't put it in there because that's not their responsibility.
Right.
Well, then whose responsibility is it? Is it the doctor's? The doctor's not going to go into your CRM system or go into your planning tool and say, hey, e-money, here's where we need to do this. No, not at all.
Right.
So in reality, when that data was not there, I started to say, well, where can I find
So you
it?
found a huge donut hole, right,
Yeah.
in the planning space.
And I sat there and I said, okay, so where can I get the data? Can I get the data? So I talked with my wife about it, and she'd seen all the emotion, the decisions we'd gone through, and she said, well, you know, instead of investing in a new car, go do this. So I cut my first check and hired some people to go look for the data. And at first we said, let's pick something simple. When does...
And InterGen was born.
Yes.
Okay.
So intergenerational data between different generations. Can you tell me when someone likely has or makes the most amount of money in their life? Let's start with the simplest question of all. We went, researched the data, bought data, got government data, went to third-party data, private data, public data, all of the different places. And we finally got enough data that we said, okay, ran it in the machine, you know, turned around and spit out 2 answers. And I looked at my team and I said, why'd you give me 2 answers? And they said, well, we thought it was very significant. All right, so let's hear this. I want to see this because I'm asking
Because you
for
wanted
one.
just one. I just want an answer.
One answer.
Right.
When would I likely make the most amount of money? That's what I was thinking, right?
Right.
And the data showed that 80% of America makes the most amount of money at 47 years of age. And on average, they make roughly around $62,000.
Okay.
And I went, wow. Okay, what about the other 20%? Well, they make the most amount of money on average at 51. And I went, okay, what's the difference? They came back and said the difference is they on average make $160,000 a year. And I went,
Almost 3 times.
oh my God.
Wow.
And I sat and I said, well, wait a minute, why? So then we started looking at a data and I said, well, can you tell me what they spend their money on? Can you tell me what they do? Where do they live? And then we found out that most of the people who made the most amount of money happen to live in places where there's 2, 3, 4 million people populations. Okay, well, what else can you tell me? Well, they tend to spend money at 27, at 29, at 31, at 35, at 41. And I went, what are they spending it on? And well, wait a minute. Can you tell me more about that population? Can we break it down by race or by gender or by where you live or what your education was or what you do? And the answer was yes. So then we started to look at the data and we found something that was really amazing. The 80% of the people who made the most amount of money at 47 were typically high school graduates, and then they went straight to work.
Right. Okay.
But the people who delayed their earnings
4 years later,
4 years to get an extra degree actually made the most amount of money. And the only way that they could support that most amount of money was to live into the bigger cities because it had more income and more variance.
job earning opportunities. Right. Wow.
Exactly.
Interesting. Okay. So
We never thought about it, but that's what we did.
So validation that, at least according to your data, that university does pay off.
It does. And now, and I say that too as my daughter gets ready to go to SMU, right? I'm sitting here all excited.
Super inexpensive university, by the way.
It's all on her. She's doing everything.
Amen.
So from that point, it was just absolutely amazing to see But the question still irked me about all these pockets of expenses. And so we started saying, well, where would these pockets of expenses come from? What are they spending it on? And then we started to ask different questions. When does anyone have a child? When do they get married? When do they buy a car? And then we started to realize a pattern emerged that people tended to spend the most amount of money in their younger years on a few different things: getting married, having their first child, buying their first home. Once they have their second child, on average, within a year and a half, they've got their second car, technically the third. Then within another 3 years, they buy their second home. So we hear things
That's
like
amazing.
people, we hear, what's the old adage? It's, you live in your first house 7 years. That's really true.
Wow.
Because at that point, you've got 2 kids and you've got more stuff than you can imagine, and you need a bigger home.
It's an interesting argument that we could just sidebar digress for a moment, like the mortgage, right? Always get a 30-year fixed. Always get a 30-year fixed. Well, if I'm only going to be in my home for 5 or 7 years, then I probably can take advantage of a lower interest rate, irrespective of interest rate environment. Just as a general product statement, it's an interesting observation.
Oh, yeah.
Who stays in their home for more than 10 years? I would say the percentages, and maybe you would have this data, but it's not a high percentage of individuals that remain in their same home. Or maybe when I become late 30s, early 40s, that might be the difference from a generational standpoint, where I have more tenure in one home.
It is, until the point where you become an empty nester. And then at that point, you're like, why do I need such a big home? If your income supports it, great, live on and go. But if it doesn't, why am I spending all this money? Why am I trying to take care of an acre yard or half an acre yard?
Right.
I don't have the time to spend. Do I want to keep spending
Nor
money
the
to keep
interest.
grass? Right.
Yeah.
You don't.
Right.
You want to live life. You want to enjoy it.
Mm-hmm.
So how do you do that? You need to make sure you protect it. You insure it. So all of a sudden, you're getting back to the same basics, which is, at this stage of life, what do I need?
Mm-hmm.
And that's the ultimate thing that we tried to do with InterGen Data, which is, can we help you understand what you need, when, why it's relevant, and how much it costs? And if, my opinion, if we can give that data to advisors or the tools that they use, let's make their job easier.
Okay, so let's then talk about that. Clearly, the data has real value. We understand that in its aggregate. What is the application process? How do I apply that in the real world, in interfacing with clients?
So there's a couple of different ways. The first way would be to have just a simple engagement tool. We've built some applications that show you, as an example, talk with your client and say, here's what I would tell you and suggest not to do. Hey, we ran your data through our system and we realized you're likely to die in 10 years of cancer, and here's how much it's going to cost you and your family. That's not cool.
Right. Let's use a little diplomacy here and censorship.
Exactly.
Okay.
But you can go to somebody and say, hey, we've been thinking about you. Things are going really well, but people at your life stage tend to go through these 3 things. They become an empty nester. They have their first children out of college. You might have to deal with a critical illness of a family member. Do these things concern you? Well, we've already given you the data on the likelihood, the prevalence, the probability, and how much it would cost. But use that language to start the conversation. So you don't have to say, can you tell me when you plan to have cancer, right? And then from there, use that to then say, are there some fears? Do you have a history? Has your parents, do they have these diseases? Do your grandparents have these types of diseases? If so, then use that to say, how can we help you plan better, protect more? How can we help you keep the promises to your loved ones? That's really how you would use that as an opener, as a conversation starter. From a risk system perspective, hey, the likelihood of this, maybe we need to change the asset allocation tool. Maybe we need to adjust their risk. Maybe we need to make sure of their spending, that they're not spending as much. From a product perspective, here's an easy one. You don't sell annuities to 20-year-olds. You're going to go to jail. If you sell them to 80-year-olds, you're probably going to jail.
Right.
Right? So there's a middle of the road, which might be 55 to 60, which is really down the middle.
Right.
But if that person has a high degree, an 88% chance of getting a cancer where they need that liquidity, maybe it's not an annuity. Maybe it's a bond ladder.
Right.
Yes, you're going to make more commissions, but now you have the data that suggests and you can empirically evidence that. So even if a regulator came up, you could talk to them and say, hey, this is what we're basing it on. It's not a gut feel, it's based on data. And that's some of the ways that you could use it, but ultimately it's about trying to show relevance of what you offer as a product and service to your customer at the right time.
So the data, that information, how does that lay? So I use generic financial planning tool, right? How do I layer that intelligence into the conversation I have with the client to say, let's use the long-term care topic as an example. And then I'd like to do life insurance separate of that. So 58-year-old, let's say female, 62-year-old male counterpart, they're existing clients of mine. We're now interjecting some of these what ifs, and I can quantifiably, more accurately impose the risk, what the need will be, what the impact will be. But is the software standalone, or how do I layer that into my financial planning tool?
Yeah, so the data is standalone.
It is, okay.
And you would either have your said financial planning tool or risk system asked to integrate our data in. So think of when you're asking questions or doing fact finds. So let's say I'm a new client, you came to me, and I happen to be the 62-year-old male, my wife is 58, and you want to learn as much about me as you can. You can provide me with as little as a zip code +4, or you can provide me with information about I'm Native American Indian, I'm 62, my wife is Korean, she's this. And all of a sudden, we would start sending you data back about their income, their adjusted gross income, tax loss carry forwards, interest, mortgage interest, taxes, points paid, alimony. We could give you all of that data. So instead of asking me 100 questions during a typical financial plan, we would just input that data and send it directly to your system so it would show up.
Wow.
Just from the zip-4. The more data you give me, so me being a Native American Indian, I have a higher propensity for type 2 diabetes than someone who is white or someone who is different than me. Well, nothing wrong with that, but I need to know that. So I stop using sugar, right? Try and save myself a little bit. But in reality, I should also set aside money. Okay, that's the protection. That's the how do you plan? But to have to ask me those questions is tough. So we can start with the zip +4 and then keep building more accuracy as the more data you give me. And then it just automatically gets entered into the database of that system. So that's the first and primary way. Does that make sense?
Yes, it does. Perfect. Okay. What about from a prospecting application? I'm an advisor. Lots of options for communities and zip codes, states, counties, whatever that I want to go into. And I would say expanding even more now post-COVID, right? COVID, virtual world, virtual interface. The world is my oyster per se. It just really is up to my capacity as an advisor and marketing engine. Are there prospecting applications that I can utilize as an advisor to really pinpoint markets that I may want to penetrate or go after?
Absolutely. So I'll start with an example of what we've actually done in production and showed people how to use. They gave us a list of clients, 15,000 clients. We do not take in any personal and identifiable information, so please know that. We will never know the name. We'll never know the physical address or account numbers or social numbers, anything like that. What we did was we said this person with the unique identifier, UID of AX1234, they're 50 years old, and because we knew the race, the gender, where they lived, kind of what they did or education, we said, here are the likely events to happen and by what year. What that meant was we could then take that information and we would then say, if you're 50, let's look back 3 years, but forward 10 years. And let's see if any life events are likely to happen. If they are, let's notify you so you would know this person is at the highest priority to contact now. And we'd tell you the types of events. So it went into the marketing system, pulled content from their content management system. In other words, likely to have cancer. Here's some information on cancer, cancer riders, here's different things that you need to think about and what you should do. And then it got marketed to that person. In one example that I can tell you, and I can't say who, but I can tell you that we conducted that same type of experiment, and we sent out the email as a marketing email. What we found was that on average, they had an open rate, very high in the industry, probably one of the highest I've ever seen. 25.9% of their emails got opened.
Wow.
Massive. And we said, we've got our work cut out for us. So we did the exact same thing, but populated something to help them from an emergency savings perspective. Like, here's how much you should save over the next 6 months, because in your area, this is what's likely to happen. With our data, the open rates increased to 48.7%.
Oh my gosh.
We nailed the relevance of what was going on in their life and what they were thinking about. Now, we had a lot more data we appended, data about income and about taxes and debt and life events, but we really improved their ability to say, this email is relevant to me now. That opportunity is massive. Then it's just up to the advisor to get in touch with them and just, do what they do best.
Yeah.
Build that relationship.
Wow. Okay. So what I would like to transition to is let's discuss a little bit about this little thing under the surface, AI.
All right.
How is that impacting, either as competition, maybe noise, or as a catapult towards your business? AI is rooted in data, right? And the access to hopefully accurate data, but then what efficiencies can be created from there?
A lot to unpack under the
Yes.
surface.
Yeah.
You just mentioned the tip of the iceberg,
I did.
realizing everything underneath. So AI for us. So
Because I would imagine, like, if taking a step back, right, in the beginning, when you first started extracting data, that was probably a pretty extensive, laborious process to acquire and amass the data. So one quick question is, how much more efficient is the gathering of data now that AI exists in your space?
AI and the explosion of AI is like a catapult, but a catapult sitting on another catapult being catapulted.
Wow.
We have...
That's hard to put your mind around.
Or on a trampoline.
Mm-hmm.
In 2014, I had to physically go download PDFs and read each PDF. I had to physically go download CSV files and try to put them together to make sense of the world. Today, and I would say COVID was actually helpful to us in the data business, because everyone in the world stopped what they were doing and started looking at what's going on. What does the data show? Now, I don't want to get into the discussion of good data, bad data, good news, fake news, any of that stuff, right?
Right, just
the
data.
main thing is it's data. When you started looking at the explosion of data, every country started reporting on who was getting sick, where were they getting sick, why were they getting sick, what were they getting sick of, how many comorbidities, how much this, and they all put it into reports. So now the data started becoming...
It's going to be really hard for me to not ask you about the data that you have on that, but we will hold back.
It might be another conversation.
Yes, it would absolutely be.
So we then started realizing that COVID made every business start focusing on data, because now they weren't so worried about growing the business, they were worried about managing the business.
Right.
Which meant they looked at, well, why do our customers call in? When are they calling in? How are they calling in? What products are they buying? When are they buying this? So that explosion was basically helping everyone understand this data is available, and then they started publishing it. The difference between us is, because we don't take in PII, I can group insurance data, wealth data, real estate data, IRS data, comorbidity data, ICD-10 code data, military data. I'm able to combine all of it in a way and to do it now more efficiently. So where it would take me 4 months in 2014 to go find data, I can now do in a day, and I can use ChatGPT or Bard to help me get started. And it narrows down probably a 15-fold increase in the amount of time it takes to research the data to find out what's relevant.
Wow.
That explosion and that capability has led to our increase in data. So when I started this business and launched our product in basically 2020, we were 158 million records, 12.6 billion points of data to create our specific, and that's what our algorithm did to create, here's the prediction model. Today, I have close to 15 billion records.
Oh my gosh.
And I haven't even started to learn on all of it yet. But as an example, through our data sets, we have, and this is no PII again, we have every IRS tax form, every piece of data on every tax form ever submitted by every individual going back to 2004, every business going back to 2007. We have the top 20 comorbidities, so ischemic heart disease, diabetes, asthma, all the things that were important to people who got the worst end of COVID from the day they started producing the data. This is January 20th, 2020. We've got all of that data that comes through, and not just in the US, we have it in Canada, we have it in the UK, we've got it in Australia, we've got it in Norway, we've got it in Singapore. The explosion of data is huge.
Wow.
It's just absolutely amazing what we have now.
That's amazing. Amazing. What I'm curious, so like a ChatGPT, OpenAI, Google, what kind of data set are they sitting on? How many, is it trillions and trillions and trillions?
Yeah.
It has to be, right?
It is. So you got to think about it. It's a language model, right? So it's being trained on our conversation, but it's every conversation that existed on the internet from every person around the globe.
Oh my gosh.
So think about this. When we used to program for Alexa, we'd built a smart speaker app and everyone was just, oh my God, Alexa, financial management's coming down the road. They missed the point. No, it has nothing to do with Alexa. It's the data. What we realized was when we programmed something, so if I said, hey, Alexa, can you tell me when I'm likely to have a child? Or how much does a child cost? We would build in and program response. Yes. Mm-hmm. Sure. Go ahead. Why not? Proceed. Okay. Yeah. Yes. All right. So we had to physically go in and program each one of those responses so that Lambda could then learn to then use that.
Wow.
ChatGPT does this in an AI model and does it within seconds. Where it would take me in a little village to go write the code for this and take 8 to 10 weeks can now be done on your phone live while you're doing it.
Wow.
And because it's done on not just my phone, it's every ChatGPT in the world, increasing the capability and the understanding of we call it semantics, ontology, the words, what they mean. Here's the verb, here's the adjective, right? Here's the adverb, here's what they mean. You know how it's all put together. Now you understand that, but you're doing it 100 million times, and then the machine can replicate itself to build another 100 million, and then replicate itself to build another 100 million, and actually recreate each one of those to understand so much faster.
Wow. Okay, so you also involve yourself with insurance companies. Let's talk a little bit about that. Clearly, well, let me take a step back and say insurance companies aren't necessarily known to be the most innovative.
Right.
In adopting technologies and things of this nature. It's expensive.
It is.
Many of them are operating on old systems, old processes, old platforms. However, we're very aware that they're integrating the access to mass data. Many are doing a more efficient job than others. I know that you have some involvement with insurance companies in this realm. So what can you summarize that's currently happening, and what do you see the progression of insurance company underwriting and the access to data and how they're going to hopefully create efficiencies for their customers?
So there are several ways, but I'm going to try and summarize it in the following manner. The explosion of data is and could be a huge saving grace for all of the insurance companies. but it's also going to depend on the type of regulation. As an example,
Because I can also see areas where access to that information could be highly punitive to certain applicants that come back in unfavorable.
yeah, and that's exactly where I was going.
Okay.
So you're doing really well in helping
okay.
prod me on.
Sorry.
No, you're fine.
Yeah.
So companies don't typically may not say, as a good example, we say provide us race, gender, age. We don't need the birth date, just age, right? Provide us education. Now, in mortgage forms or a credit card application, that's standard. In insurance, if you drew blood, you're going to need to know my race. You're going to need to pull it through. So you have the data, but you don't want to use it because you don't want to not allow someone to get a policy because of that. That's discrimination.
Right.
Now, that doesn't mean you don't have the data, but there's a massive difference today between how that data is being used. So it also depends on, I don't want to say progressiveness, but let's say the ability for the compliance departments, for the risk departments to use that data in a better manner. So instead of saying, hey, I've got a likelihood of type 2 diabetes at this age, my premiums might go up. Well, that's the same as if I drove my car 90 miles an hour and I've got 10 tickets in the last 6 months.
Absolutely.
My insurance is going up.
Right.
Right. So that's behavioral. This is what's happening. You're costing us more. You pay more. Okay. Well, that used to be the way things were done based on who you were. But now the data is there that really shows the difference. So as an example, people who your longevity, how long you live tell, the average is 78.4 years or something the average man lives. That's average, but that's not necessarily true. So as an example, our data shows, again, based on all the deaths in the country, we can show you that the average person of Alaskan descent dies at 65. Well, that's 50% die before then, 50% die after, but the average Asian male dies at 81. That's a massive difference. Well,
Huge.
women live on average 4 years longer, but an Asian female typically lives to 86. So what if the Asian female married the Alaska male? She's not getting the money in retirement because he's not earning it. She's likely paying and dealing with the critical illnesses or what's happening beforehand.
And what are the financial effects of that?
Correct.
And then post-death, so she's now the surviving spouse. How is she going to plan for another 20 years?
Exactly. And living on less and being stressed and having to get away from work because she's having to deal with a sickness. Now, that's not always the case. It can go the other way too. But the data is there, and it's very strong, the evidence is. And it's not just my data. It's data you can get from the Bureau of Labor and Statistics, you can get from the CDC. So we culminate and aggregate tons of data, but we have these points already built out where we can show this to people. So that's an interesting point. So how do you get an insurance company to move away? And maybe they should or shouldn't. I'm not suggesting either way. But they have a group mentality where they want to put everyone in as one large group. That's not personalization. To me, some people might say that's hiding data. Some people might say that's okay.
Right.
Either way is great, but take that stance. That data can help them. Maybe they need to invent a new product for a specific group. Is that a bad thing? I don't know. What I can tell you, though, is that state regulators and the regulation around AI is going to make a lot of this all come under scrutiny. I think it was Colorado came out several weeks ago and said that everyone who uses AI and risk modeling in this, the chief risk officer has to sign off on every model.
Oh, wow.
That means they're liable. What do you do at that point? If you're liable, do you shut everything down? Or do you just start openly showing the transparency of the data? Well, does that hurt your pricing? Does it help your pricing? I don't know. But the explosion of data is going to force insurance companies and other people to start thinking differently. Now, ultimately, where it goes, my belief is that it's going to grow to be completely transparent, that you're going to have to show these models and you're going to have to show how it affects certain groups. I'm not trying to say this from a perspective of being negative. I'm looking at this from the perspective of how will this help? Can we actually personalize something to Rob Kirk, Native American Indian, wife Nikki, Korean, children who are half and half? Well, technically, they're not 50-50. They might be 60-40, might be 55-45. One of them has a little bit more of the genetic makeup of me, the other one of my wife. We each, as a household, have different life events, different critical illnesses. That's personalization, getting it down to that type of level and planning for it. That's my opinion, and I'm betting my company on it. So
Okay, so we're running out of time, but I want to ask you, what about these tests so access to massive data like a Pernuvo body scan, and some of these DNA tests that test for 27 different things. Your data in one version does more efficiently emulate or tell us some of those results. Maybe I understand not nearly as acute or personal, but the subset of the data does lay a foundation for that.
completely.
What's your take on these? And does that information ultimately make its way into the mainstream in whatever form?
I completely believe so, and here's why. So I'll say it this way, and I'll try to say it quickly. I started this company, InterGen Data, to help people understand when these life events occur so they won't have to deal with the hard times, especially on the financial side. While I started this company, my wife was diagnosed with 2 cancers at the same time. That was devastating.
Mm-hmm.
I shut the company down because I didn't know what was likely going to happen. Was she going to make it? Were we going to make it? Would I have to sell the house? All of the thoughts go through your head, and it's a dump. And then all of a sudden,
Your whole world was turned upside down.
completely.
The whole master plan.
didn't mean anything. Meant nothing. All the company, whatever I spent on software and people, it was, I'm done.
Mm-hmm.
We're waiting. And for 6 months. Now, thank God, nothing. She's in complete remission. But it's kind of funny that I'm trying to help people and then having to go through an event at that same time.
Right.
So the reason why that's really key is the fact that's this. We believe that our prediction gives you an understanding that, hey, there's a really high probability, 80% or higher, that this might happen to you. I'm not going to be a doctor. I'm not going to be an oncologist and say, go and take this medicine. No. What I'm going to say, and we work with companies like, as an example, we formed a partnership with a company called Predictive, so Predictive without the E, and they take a fingernail clipping. They will sequence your genes. These are professors and doctors from Hopkins that worked on CRISPR and the FDA, and they built a company where they take that fingernail clipping for $800, and I apologize if that number is incorrect now. And what they do is they sequence.
Inflation may have taken effect a little bit.
So they then sequence 20,000 genes. So think 23andMe, but think 20,000 of me.
Wow.
And then they will tell you, here are genetically the exact number of things that you could potentially be liable or have happen to you. And then they would tell you, here's the types of medications that do work and don't work with you. Not me or people like me. So we say that data helps you. It's the fair warning. Hey, there's an accident 6 miles from now. Or maybe it's 20 miles from now. Well, in 20 miles, by the time I get there, do I prepare now or do I wait a little bit or do I use a company that actually tells me this is truly accurate?
Mm-hmm.
We give you the ability to connect with them. We don't want to know specifically your information, but they would, and they would work with you. And then if they came out and said, yeah, here's the likelihood of the BRCA gene coming down, you need to address this, then you would probably take that data to your doctor and say, here's what I found out. We're the early warning system. They're kind of the diagnosis piece, but they work with your doctor so that you would know what specifically do. Only in your case, one of 8.4 billion people in this planet, just you.
All for $800, or roughly.
Yeah, roughly.
That's amazing. You know, and right there is a perfect example of like longevity and the conversation of longevity. And I really don't think it's beyond us as humans to have an average life expectancy, late 90s, maybe even 100.
Yeah.
Because of things like this, access to that information and being able to do something with it, right? And being aware. And
you said doing something with it. That to me is the perfect spot. I love what you and your listeners do and what you guys do in your practice, because we have the largest population ever going to be over 75 million boomers by 2030. They're going to need a lot of help on the critical illnesses, on all the things that are going to happen to them, but it's not in any of their plans.
yeah,
You guys are at the forefront, and basically you've got 7 years to prepare for this, in my opinion, because at that point, when you get to the 2030, we're catching the tail end. People are going to start dying off ahead of time. How are you going to help them? Do it now. Do it now. Don't wait.
Thank you so much for coming in. This was extremely insightful and valuable. Thank you to our listeners. How do people get in touch with you?
Well, you can go to intergendata.com, find out a little bit about us. You can email me at rob@intergendata.com. I even post my mobile number. You can call me, 917-680-8702. I'm here to help. We're here to supply the data. You guys are here to do the work. You guys are here to build those relationships. People need you, and I'm here to help empower you.
Incredible. Very, very good.
Thank you.
Thank you. Thank you very much for coming in today.
Absolutely.
Cheers.
Thank you.
Thank you for tuning in to today's episode. Please subscribe, like, share, leave a comment or review. Be sure to check us out on social media at Optimized Advisor Podcast. Till next time.